Happy Sunday. Winston and I are ready for a hike, but it's raining like mad. So we're waiting it out for a little bit here in the car before we get cracking up the hill. And what's actually going on today? Well, two things really. One is some smart analysts warning that we might be underestimating the inflation fight impact on earnings. At the moment, for Q1 2023, analysts are expecting a 5% increase in earnings per share. Now, why would that be potentially a risk? Because if we do dampen inflation, the inflation has already been priced into costs of most manufacturers, but because demand slowed down, because they caused the recession essentially, they are not necessarily able, the companies that is, to raise their prices by as much as inflation has taken place, therefore putting a squeeze on margins. And so far, all the earnings per share forecasts I see are quite rosy looking. So that's a real kind of risk here. Another risk, semiconductors. You might have seen the sort of revised US ban on chip technology and chips to China. Definitely some headwinds there for all the big chip manufacturers, your Intels, your Nvidias, and so on. Saudi companies, SK, and Korean SK, and everybody who supplies this space, because they are now also targeting very much the component manufacturers to be able to manufacture high-end semis. Is that going to stop China and slow their growth? Probably for a little bit, but it's also giving them the impetus to really focus on this. So I reckon they're going to find a way. That's normally what happens. You need an incentive to really get there. So I think it's a little short-sighted. I don't think it's really going to help the US in the long term, other than probably hurt US chip manufacturers and component manufacturers. So yeah, there we are with that story. The Fed shouting very loudly interest rates are going to go to 4.25 or 4.5%, which is really at the top end of what markets are expecting. So they are still trying to keep a lid on any kind of rally opportunity, though last week really was entirely a short squeeze situation. That's also why it unwound so quickly. It'd be super interesting to see what happens going into next week. Volatility index still inverted. That means the now is still bonkers bananas. The loons are running the asylum. So expect lots of volatility and be kind of careful with that. Good time to make some money off volatility, sure. With options, that's what we do. Good time to buy cheap, great quality stocks. Yeah, I would say so. Just make sure you do your research first. But the ups and downs will definitely still be there. So that's me and little Winston here from the pre-hike vehicle, and we are going to brave the weather, even though it looks pretty miserable at the moment. But you know, when I tell Winston that we're hiking the next day, I put my bag out. He sleeps next to the bag and he doesn't move from it all night long. So I can't really say to him, well, it's raining, let's cancel it, can we? Plus, I'll enjoy it once I'm out there. So thanks for watching. See you on the next one.